Hello, folks. Richard Reyes, certified financial planner and Orlando's own financial quarterback, and it's Life Insurance Awareness Month. So obviously today we want to talk about life insurance. Now, life insurance, many people ask me if they need that in retirement. And the answer to that question is, well, actually, maybe. It's not really a yes or no because it's dependent on some variables. First of all, are you healthy enough to get the insurance? Or are you able to pay for the insurance? And obviously, number three is, hey, what are your goals and objectives? What are you trying to do? Now, there's many uses of life insurance. Life insurance is often misunderstood, but it's very, very powerful tool that can actually do a lot of stuff, and a lot of stuff in a great way. But what are some uses of life insurance is, first of all, something that's called pension maximization, where you can use the life insurance in order to provide yourself a 30 to 35% increase in your pension. You can obviously use life insurance in order to provide your spouse income if something were to happen to you. You can use life insurance to provide an inheritance to your kids. It's a very cheap and effective way to do that. You can use life insurance to provide a gift to charity, of course, when you pass away. Very cheap and effective way to do that. You can also use a life insurance to pay for estate taxes or to pay for federal income taxes on your assets if something were to happen to you. And lastly, but certainly not least, you can use life insurance. It's a very powerful tool to use for tax-free income at retirement. But today we're going to focus on using life insurance to increase your pension. And in this example, we have Tom and Mary. Tom has a pension. He goes to the HR department, and the HR department gives him a printout which says, Tom, if you pick option 1, which is life only, your benefit is going to be $5,000 a month. Or Tom, since you're married, if you pick option 2, which is a joint life, is we'll give you $4,300 a month, and then when you pass away, we'll give your wife $4,300 a month. Well, there's a $700 difference here. Now, 99% of the time, a married couple will fixate themselves and focus on and select the joint option. Okay? But there is a better way. Now, the planning question here is understanding that there's a $700 difference, which is a life insurance premium. But the question here is whether there is a less expensive way to acquire enough insurance to provide Mary with $4,300 a month when Tom passes away, and of course, for a cost less than the $700 a month difference. Well, there is, and that's where life insurance comes in, and a review of their age and their health came up with that Tom needs to get a $750,000 life insurance policy, and that $750,000 policy will provide, at Tom's death, provide Mary with $4,300 a month. Now, obviously, Tom has to buy that life insurance policy, and there's a cost of it. And the cost of that life insurance policy is $3,500 a year, okay, which is about $300 a month versus the spread of $700 a month. So Tom takes that $300 a month, pays for the life insurance, and then Tom gets to keep the $4,900 a year in additional income. Folks, over a span of 20 years, you know, that's about $98,000 a year in income, close to $100,000 in additional income in your pocket that you're putting in there just by picking the life only, using a life insurance policy to pay your spouse. Now, what are the cases here? What happens? Well, if Tom dies, obviously Mary gets a $750,000 life insurance policy and then starts collecting a check for $4,300 a month for the rest of her life. Well, if Mary dies, well, Tom actually gets to keep his $5,000 a month, which is higher than having to pick joint life, okay? So Tom gets to keep his $5,000 a month and then can cancel the life insurance policy because obviously Tom's not married anymore, so he doesn't need to provide Mary with income in case if he dies. So what we're getting at is it's important to plan, it's important to take a look at these things and understand that, hey, you know what? Life insurance is pretty powerful if you use it in the right way. So I'll see you next time on Financial QB TV.